I'm just a regular guy, a father of four. I got dogs and a wife and kids, and I don't have a master's in finance. I've never taken any courses. I'm completely self-taught. I'm not trying to sugarcoat it at all. Trading is hard. This isn't something that is comfortable. I'll be completely honest with you. I was at a point in my life where that money wasn't live or die. If you're somebody that has a lot of money to invest and you want to put your money into these dividend stocks and these dividend investments, I love it. That's just personally not where that's not the sandbox that I play in. I built a life for my family because of trading, not because of investing in dividends. You're comfortable where you are with, but the really explosive moves happen in stocks. I took 37,000 and turned it into over 2 million. I couldn't have done that using ETFs. This never would have happened for me. If you want to take a portion of your wealth and commit it to trying to learn something new, you could take $10,000 and 10x it trading. So I'm all in. I mean, you know what I mean? This is how I feed my family. This is how I put food on the table, and I love it.
Investors, welcome back to Masters of the Market. Now, this week, I am incredibly excited to have Nate Baer on with us. The man, the myth, the legend. He lost just about $10,000 before he got heavily into trading and became a millionaire. So as you all know, this is primarily a dividend investing channel. Nate's about to bring the heat and the fire about trading. So Nate, welcome to Masters of the Market. It's an honor to have you on with us. First question right over to you, Nate.
Absolutely.
What's your story? How'd you get to where you are today?
So yeah, I mean, we'll start by going all the way back, right? So this is gosh, I've been trading now for coming on almost 20 years. It's hard to believe. I mean, the time it just flies by, but it all started with me had a job out of college and had money in my 401k, and just kind of got fascinated by watching it go up and watching it go down. Like, wow, I wonder if I could do that. And it ended up that I ended up leaving corporate America, sort of started my own business, and that afforded me the opportunity to have more time during the day to sort of focus on a few other things. I didn't have a boss standing on my shoulder and monitoring me all the time. So I started getting into trading a little. And as you mentioned, I was horrible at it. I didn't know anything about it. I'm not educated. I don't have a master's in finance. I've never taken any courses. I'm completely self-taught. And but I got into it, and just like you said, I lost about $10,000. Like, well, that wasn't a lot of fun. But from there, we sort of, got the things moving in the right direction, started doing things a little differently, started looking at things a little differently, and a few years later, I'd made a couple million in the market. So yeah, I'm just a regular guy, father of four. I got dogs and a wife and kids and responsibility, and I trade for a living. It's a lot of fun.
So now your full time is just trading. That's it.
That's
No
it.
boss, no one to report to.
That's right. That's right. Absolutely. Yep.
Okay. So I got to ask because as you know, primarily a dividend or value investing channel. And
Mhm.
a lot of the viewers out there are going to obviously hit us with the comments of what's going on here. Trading doesn't work. And, before we dive into trading, the first
Mhm.
question I just want to ask you, and be as honest as you wish.
Yeah.
What are your honest thoughts on dividend investing and value investing?
So I think it's great, and I think that there are different types of investments that will resonate with different types of people, right? So if you're somebody that has a lot of money to invest and you want to put your money into these dividend stocks and these dividend investments, I love it. That's just personally not where that's not the sandbox that I play in. It's not to say that there's anything wrong with that sandbox. It's just that's not how I do it. I'm a little bit more of a like, let's spot an opportunity. Let's find a way to take our money, put it into the market, grow it quickly, turn it around, get it safe. But I think it's great. It's honestly something that I would love my kids to learn more about, right? But it's just it's never the way that I've been taught or the way that I've learned or the way that I currently, participate in the markets.
How did you get to the point? Because trading at the end of the day, I mean, it's risky. I mean, you got to be hands on all day long. A lot of people don't have that risk tolerance.
Mhm.
What shaped you in your past to get you to this point where it's like, no, I'm all in on trading?
Yeah, I mean, I think it was the challenge, honestly. Like, it's like I'm a math guy. I graduated from Georgia Tech in 2005, and I've always had a, thing with numbers. And it's just this idea that I can take sort of my brain and look at a chart and do this technical analysis and try to find patterns, and these things sort of jump off the chart at me, and I'm like, hey, I've seen that before. I wonder if what happened last time I saw that pattern is going to happen again. And the challenge of finding that pattern and making money and pulling money out of the market, and then the thing that it's like every day is different. Every day I come into work and it's like this is a totally different landscape than it was yesterday. And it's just a lot of fun. It keeps me energized. It keeps me excited about, getting up every day and like let's what's the market going to throw at me today kind of a situation, right? It's just been a lot of fun. And I think really more than anything is I'm the type of person that enjoys the challenge of it.
Do you have
Yeah,
sleepless nights at all?
absolutely. I'd be completely lying if I said no. I don't ever look at the futures overnight. Absolutely, all the time. But there's like a fine line, right? There's points in my life where I traded a much bigger account where my kids were younger and had more time during the day. And these days I'm more focused on teaching and helping people and so I don't have these massive positions overnight. But yeah, I tell you, there are definitely some sleepless nights. Yep.
So, okay, you told your kids to start off really, I guess, with dividend investing or value investing. Was that just to get their feet wet? Do you ultimately want them to follow suit?
It's really up to them. That's the crazy thing about it is you'd think that, I've got four kids, you'd think they'd all want to be down here like, hey dad, show me what buttons to click so I can make some money to buy some, some Fortnite V-Bucks or whatever they want, whatever they're into, right? But they're really not as interested in it. They're like, hey, I like this stock, or I just want to buy it and hold it because it's like what resonates with them is like they know, for example, they know what Robux are. I'm sorry, Roblox, the ticker RBLX. They play it. So they're like, hey, I want to buy that stock because I know it. And or the Netflix. Hey, I love watching Netflix. I just want to buy Netflix and hold it. And they're not as interested, at least not yet. And hey, let's go find a 30-minute chart pattern and see if we can make 10% on an options trade between now and tomorrow. That's the cool thing about trading and investing is that you can find your niche no matter who you are. There's something for everybody. And I think that investing and doing dividend trading is smart, it's sound, it makes sense. And for certain types of people, it's just right in their wheelhouse. They're comfortable with it. But it is kind of interesting that, but yeah, I think my kids are not quite there yet.
I mean, look, you initially lost the 10K,
Mhm.
and most people really would run the other way. And some people I've had on, they've lost more than 10, like 20K, right? And 30K. And then they're like, okay, I'm dividend investing or I'm value investing
Mhm.
or I'm just going
Yep.
ETFs. How did you overcome that fear to get back in and to go after that next challenge, that next trade after losing the 10K?
Well, I honestly, again, I'll be completely honest with you. One of the things about it was that I was at a point in my life where that money wasn't live or die. I didn't at that time have a wife and four kids to support, and I was just me. So I lost the money. Like, well, now I've got to eat, frozen pizzas for the next couple of, 6, 7 months, right? Until I can build this back up. But it wasn't like crap. I've got to sell my car or we're going to lose our house. So I think that's again, being totally honest, if you're in a situation where you have a little bit of income that you can lose to try and learn a new skill, you're in a great spot. If you're down to your last $1,000 and you're like, I'm going to trade this into a million, it's probably not going to work out very well, right? But it's I just like I said, the challenge of it. Like I lost that $10,000, and it wasn't a situation where like screw this, I'm never doing it again. But for me, it was like, okay, well, that's fine. I'm gonna get back in the game. I'm gonna learn from my mistakes. I'm gonna get some help. When I first started, I didn't. I honestly, I was just reading like Yahoo message boards. It was totally toxic, horrible. Making these stupid mistakes, and then I decided to get back into it and say, okay, let me find a mentor. Let me find somebody that has done this, that is doing this, that can teach me and show me the ropes, right? So that was the biggest, like, sort of like 2.0 when I started again. I was a lot smarter about it instead of just throwing money in the wall and seeing what would stick.
Sure. Hence, probably the open house that you have coming up, which we're going to get
Yes.
to in a bit.
Mhm.
But before we dive into your strategy, because I really want to ask a lot of questions about the strategy and the how
Mhm.
to's of trading. But the reason I pulled you on, Nate, is because, yeah, I am a dividend investor and a value investor. And I guess I play it a little more safer, right? If I'm
Mhm.
engaged in a conversation with you, probably really safe.
Yeah.
But if I were to start trading, or for anybody else out there who wants to start trading, what would you recommend to do first? Like, what are the initial moves that we should do? How much money should we put aside to begin?
Yeah. No, absolutely. I mean, so if somebody's trading for the first time ever, literally for the first time ever, I would recommend starting with a paper trading account, which you can get at, almost any online brokerage out there. It's free. And that way you're not losing money by clicking the wrong button. You're not buying a call when you meant to buy a put. You're not selling an option when you meant to buy an option. It's just sort of learning the ins and outs of your brokerage. But from there, the best way I know how to learn, the best way I know how to learn to do this is to actually just get in there and do it. You got to get your feet wet and you've got to trade in a way that is not going to hurt you. So trading with literally one share of stock, one option contract, really size that is not going to change your life. It's not going to affect you in any way outside of the market, but so that you can start to learn. And then from there, there's a million different ways to make money in the market. I've read a lot of books. I've followed along with a lot of mentors, of a lot of online sort of personalities. And eventually, as you're going through and you're sort of getting into this, you'll find someone or some method that sort of resonates with you. And then I would challenge you to take that and then to just blinders. You've got like, you're only focusing on this one thing and you're doing it with extremely small size. And what will happen is eventually you'll say, hey, you know what? This really resonates with me. I'm gonna do this with a little bit larger size. Or you know what? Like I just don't get what this guy's talking about, or I don't understand what this book is trying to teach me. It's a little bit too complicated for me. I'm gonna go find a different edge. And there's so many different edges out there. And an edge is basically just something that happens in the market, something that we can identify, something that we can quantify that is repeatable. And over time will pay out. Like, a house in a casino, right? They have an edge. Over time, they're going to make money off the people that are gambling over time, all the time, right? That's how they're in business and they have an edge. So you can find the same sort of thing in trading. But really it's just about getting into it. It's just getting your feet wet, just like anything that's worth doing. You've just got to get in there and you've got to get started.
Should we be prepared to lose money?
You should
should
be. I mean,
should we
if we're being
brace for
totally
impact?
honest, absolutely. Absolutely. And I'm not trying to sugarcoat it at all. Trading is hard. This isn't something that is um, comfortable. It's not an easy thing to do, to put your money on the line and to watch it go up and down. And so much of trading is not actually what happens in the market. It's what happens between this year and this year. And how you psych yourself up and you talk yourself into things that you know are the wrong things to do. I've made every mistake in the book. If you go into it with a mindset, like say for example, all right, I'm going to risk $1,000, just period. That's what I'm going to risk. I'm going to try and learn how to trade, but I'm going to risk $1,000. You almost think of it like a tuition for a course. Like you want to learn something new, you're going to have to pay for that information, and trading is no different. But yeah, I mean, everybody loses money when they start. I've anytime you ever hear a story like, oh, I just started trading for the first time and I turned $100 into a million, like they're full of it. You know what I mean? It's not.
That's
But
where you run the other way.
yeah, exactly right, exactly right. But you can be smart about it. You can go into it knowing like, hey, I'm new to this. I'm going to probably take some paper cuts along the way, but as long as I don't lose an arm or a leg, I can learn how to do this too. And
Sure.
you can change your life.
Look, I think I've had so many investors come on here, and of
Mhm.
course, a lot of dividend investors, value investors, chief financial officers, whatever it may be. And a lot of them stay the course of more of the value orientation. And again, you're coming on sharing with us that number one, it's like be prepared for the Navy SEAL esque like investing. It's hard. It's going to be
Mhm.
hard. It's going to be hands on. You're probably going to lose money. It is not easy.
Mhm.
So, what are some of the best strategies? What's your strategy when it comes to
Sure.
trading? How do we find that edge, and how can we maybe copy your edge?
Yeah, yeah, absolutely. So I'm gonna share my screen here.
Sure. It's like the real deal. By the way, everybody who's out there, this is like a sneak peek. Nate actually does what he calls an open house that you can actually jump in with him for free and learn the real deal of trading, which is precisely why I wanted to bring him on because the more investors on the channel who are dividend investors or value investors, and they may want to dabble in trading, perhaps it's not all that bad. So take it away, Nate.
Yeah, absolutely. So let me just give you a quick rundown here. So this is basically my screen, right? And what we're looking at here is a chart of the Qs, the Nasdaq, the QQQ, which is the ETF for the Nasdaq, right? And I'll go back and forth and look at the different things. We can look at the S&P 500 here, um, and I'll move around and I'll draw on the charts and I'll show you kind of my main edge. So what I want to do is break that word down a little bit more. Okay, so an edge
Sure.
is basically a set of circumstances that occurs in the market that we have seen in the past and we have a reasonable expectation about what might happen in the future. And a lot of times you'll get asked like, well, if you don't know what's going to happen, how can you ever make any money? It's a great question. But our job as a trader is not necessarily, and it's probably the same thing with investing, right? You think this thing is going to happen, so you put your money on the line, but you also define your risk. Well, trading is no different. It just happens a lot faster. So we do the same thing. We look for an edge, we put our money on the line, we define our risk, and then we just let the market do whatever the market is going to do. Um, so the main edge that I trade, and this is just something that I've come up with over the years, I call it the TPS method. And essentially, what that stands for is T for trend, P for pattern, and S for squeeze. So there's three main components to my trading edge: trend, pattern, and squeeze. And if you'd like, I can give you a brief rundown and show you what that kind of looks
Please,
like.
yeah. The more
All right.
information, the better for all of us. I
The
mean,
more info, the better.
you're talking to a
Absolutely.
bunch of value and dividend investors right now.
Nice, nice. So when I'm looking at the markets, okay, and I'm looking at a chart, the first thing that I want to do is I want to trade. I'm what's called a trend trader. Okay. So let me even back up a little bit further. When I'm looking for trades, I don't look at company filings. I don't look at earnings reports. I don't look at what the CEO is doing with his shares. I don't look at the perspective for the next 6 months. I'm looking at the chart. I'm a technical trader. So what I'm doing is I'm looking for patterns in charts that I've seen before that I believe I have an edge here. I think I know what is potentially coming next. So I'm a trend trader. And what does that mean? Well, I'm simply trading with the trend. I want to, if a stock is going up, I'm not the guy that's going to say, hey, that stock is too high. It needs to go down. We're going to go short it. Or if a stock is going straight down, I'm not the guy that's going to stand up and say, hey, you know what? That stock looks like it needs a friend. I'm going to come and buy it. I'm going to come pick the bottom. I don't do that. I trade strong stocks in a bullish way and I trade weak stocks in a bearish way. And that's what I mean when I say trading with the trend. So, one of the things that we need to do is be able to identify this quantitatively, right? We have to be able to look at a chart and say, is this in a trend? Yes or no. And I do that with moving averages. So, these lines on my chart, this
Mhm.
orange line here, the
Sure.
blue line here and the yellow line here. These are I have exponential moving averages on my chart. And so the orange line is the 8 EMA, the blue line is the 21 EMA, and the yellow line here is the 55 EMA. If these moving averages are stacked positive, meaning the 8 is on the top, the 21 is in the middle, and the 55 is on the bottom, then guess what? It's trending up. It's not my opinion that it's trending up. It's not my opinion that it's trending down. It's the moving averages are what we call stacked. Okay. So the moving averages are stacked up, which means the trend is higher. So that's how I determine, is the stock in a trend. Sometimes you'll have a situation where you can look and say, okay, well, the moving averages are kind of mixed up in through here, right? The 8 is in the middle and the 21 is on the bottom and the 55 is on top. There's no trend in that case. So for me, if there's no trend, I just move on. I don't really like to trade choppy stocks. And we're looking at a chart of GE, by the way. Um, so that's the first sort of component. Okay. The second thing that I'm looking for, right? We have trend. The second thing I'm looking for is a pattern. And this is where we get into that edge, right? So I'm looking for a pattern. And for me, I don't have like a book of an encyclopedic, huge volume of 7,000 different patterns that I have to memorize. I'm basically looking for one of three patterns. I mean, it's pretty simple. I'm looking for, and this is all technical analysis like 101. When you start to learn how to read charts, the first thing you're going to learn about is called a bull flag or a bull pennant. And basically what that is a price that moves up and then price that starts consolidating near a high, right? So what
Sure.
does that mean in terms of like what's actually happening? Well, the market is saying, hey, you know what? This stock, for whatever reason, did well on earnings, or they've got some AI prospects and we need to reprice them. We think they're worth more, or they're going to be worth more in 6 months to a year from now than they're worth currently. And that's why the stock goes up. And then what happens is you get a period of rest, right?
Sure.
And then usually from there, you get a continuation of the move. So I'm again looking for strong stocks to get stronger, and I'm looking for weak stocks to get weaker primarily. I'm not a reversal trader where I'm looking to pick tops and bottoms, but I'm looking for this consolidation period. And what happens is when you get a nice clean consolidation period, you'll get a pattern. And again, I'm just going to draw these on here, but typically there's a couple of different types of patterns. A bull pennant looks like that. A bull flag looks like this. And sometimes I'll do a reversal pattern, but typically it's one of these two. I'm looking for a bull flag or a bull pennant. And what we can see here in GE, right, is here's your flagpole
Sure.
and here's your flag. So GE has had a really nice move up. It's now taking about a quarter to consolidate in through here. And now it looks like as if it is ready to start moving up again. So that's it. And this not only works on, this is a daily chart of GE. This works on 5-minute charts if you like to day trade. It works on 30-minute charts if you want to position trade and kind of get into something today and out tomorrow. So once I have those first two components, right? I've got a trend here in GE. I got a pattern, right? We just talked about the bull flag. The last thing I'm looking for are these red dots down here. This is an indicator called the squeeze. And this isn't something that I created. This was created by John Carter, who many of you have probably heard of. He's a very, very famous industry-wide known trader, teacher. He created this indicator called the squeeze. And what it represents is consolidation. So basically, when we see these red dots, if you think about it like we just had the Olympics.
Sure.
So you think about these long distance runner or these triathletes, right? They don't go from one event to the next event to the next event. They go for a run, right? Then they take a break overnight, get some carbs, get some pasta, right? And then they go on for a swim, and then they take another break, get some sleep, and then on to the next leg of the race. And that's kind of the analogy that I like to use with these charts. They make a move, then they rest, then they continue to make a move. And what we do is we use the trend to determine the next leg of the move. So if it's trending higher, we want to make a bet that it's going to continue going higher, right? If it's trending lower, we want to make a bet that a move down followed by a pause is going to continue lower. And what we can do then is say with this indicator down here, hey, these red dots tell me that it's rested. It's in that rest mode and it's ready to move out of that mode. So if we look back at the chart, notice we have some red dots in through here, right? And
Sure.
here's our consolidation. And then we have this big move higher. And now we've had red dots now for almost a quarter. So GE is up here consolidating, consolidating, consolidating. And it looks to me like it's ready to start moving higher. So those are kind of the three components. If I have a trend, a pattern, and a squeeze, then I can take a trade. And we can do this, like I said, on all different time frames, depending on if we're looking at day trades, if we want to trade the indexes, we can trade the indexes using the system. We can trade individual stocks using the system. And then we can structure our trades using options to allow for a option. Again, I'm trying to not go too fast here, but with options, right, we have to determine a couple of different things. We have to determine how long we want the option contract to be valid for. That's our expiration date. And then we have to determine how aggressive we want to be with a strike price. So if we're trading like a daily chart, we want to go out 30 to 60 days. If we're trading a 5-minute chart, we may buy options that expire the same day,
Sure.
right? So, but that's the general edge is the TPS method. And I primarily look for this edge across the board.
Nate, do you use macros at all? Like, for example, and we're looking at this chart now and we see that it's in that resting period about to go up a bit.
Mhm.
How do you know? Like, what's the telltale sign? Are you using macro events at all? Or is it just you're just eyeing this baby down
Mhm.
every day
Yeah.
and you're just
Yeah. We're
watching for
just,
the trend?
you got it. Yep. We're just watching it. We're just watching it. And one of the things that we've developed, and I'll pull this over and show you real quick here if I can grab it. Let me see. We actually developed a scanning software. It's an AI scanning tool. And I know this is kind of getting a little off topic, but we actually built this software to go in and look for these setups. So I've got a private watch list within this, and I can sort of filter it by, let's bring the best bullish setups to the top, right? We got like 3M and Spotify and these A pluses. When we have a trend, a pattern, and a squeeze, this scanner says, hey, you've got all these components that you told me to look for on a 30-minute chart, on a 15-minute chart, on a daily chart. So that's kind of how I cut through a lot of the noise in the market. And I just focus on the best setups that are happening in real time.
What's interesting too is, it's not like we're talking about penny stocks here, because a lot of the
Right.
times, right, in our minds, or I'll speak
Mhm.
for myself, in my mind, it's like we're making big bets on penny stocks and these movements. At least that's what the masses see on
Mhm.
YouTube, for example. It's like, what are we trading today? This penny stock or that penny stock? And on that chart, we actually just saw, Spotify's on there, 3M was on there, a classic
Yes.
dividend company. So
Yes.
are these slower
Absolutely.
movers? Are they fast paced to trade? Like how do we work with the 3M?
Sure. So 3M is a great example. So again, you have to trade the I mean, this sounds silly, but you have to trade the stock that you're trading, right? So I can't with 3M, it is a slow mover, and that's okay, right? So 3M is one that we had a really, really nice trade on recently, and I just want to show you this. This is exactly what we're talking about. So does this now kind of look a little bit familiar based on
I
what we just
concur.
talked about, right? Check
Yep.
this out. Hey, look at that. I've seen that pattern before. Hey, look, I got a squeeze. Hey, look, I've got moving averages stacked on top of each other, stacked up, right? So that's it. That is my system right there in a nutshell. And this is a trade we were actually in. So 3M here had all the components that we're looking for. And this may not look like a huge move. I mean, it's a $6 move, but with 3M, the options are priced such that that move, depending on which option you took, was 100, 200% gain. No problem at all. Right? I
Would
mean,
we
think
call
about that.
3M like a safer bet, if you could say that?
Absolutely. 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 So when I'm trading 3M, I can go out and I can buy options that are like 60 days out. And I really don't have a lot of worry. Like I'm not going to wake up and 3M is going to be down $12, or $50, or what was the one from today, right? SMCI. This thing felt like 100, it was 25% down on the day. It's like this stuff is interesting and it's kind of cool and it's kind of like we follow it because it's fascinating, but this method works really, really, really well in some of those more stable, GE, for example, right? Stable stock is some of the companies that we've all heard of. I just, again, there's nothing wrong with them. I don't trade penny stocks. Like that's just not, again, not the sandbox that I want to play in personally. I don't think there's anything wrong with them, but I would say 90% of the trades that I've taken this year are in names that most people have heard of. Maybe a
Sure.
few exceptions, but even probably 95 to 99% of the names that I've traded are on the S&P 500. Like, it's just that's just where I play ball because that's where the most I trade options, and there's you need the liquidity in the options. Um so I really don't trade a lot of penny stocks or, anything like that.
Let's go back to this Vegas analogy real quick. Would penny
Yeah.
stocks be like the slot machines versus the 3Ms of the world, or the alike being more like, I don't know, Jack Black table or something of that sort?
Yeah. Yeah, probably so. I mean, it's the thing about the penny stocks, like you said, is it really is like a slot machine. You put your money on and maybe you hit big and probably most of the time you don't. You just lose your money, right? But if you go and you're playing, blackjack, you've got a much higher percent chance of winning. The house still has the edge, right? But we can also sort of stack the deck in our favor by using a method, by using something like the TPS method and saying, hey, I'm only going to trade stocks that are trending, number one. I'm only going to trade it when there's a pattern, number two. And I'm only going to trade it when there's those red dots on the bottom, number three. And now I've got the edge over the house. But
Sure.
yeah, penny stocks, they're
There's that
fun, but
classic saying though, the house always wins. And in our
yes.
case, you're just saying once you win, leave the table. Yeah.
Yeah,
Like
get out of
walk
there. Get out of
away.
there.
You've won.
Yes. Keep your money. Keep your money. That's right. Yep.
Nate, what are some of your, I guess, favored technical metrics if you
Sure.
had to name like the top one or two, three of them?
Yeah. Yeah, absolutely. So the first one is definitely the squeeze, which is that indicator that I showed you, um, which is down here. And basically, I live and die off of this indicator, and it's essentially so when I'm because I'm a trader and not an investor, right? I'm not going to buy a stock and hold it for a year. I need to look for those moments in time where I have the potential to make money to get in and get out. And this indicator helps me do that. It helps me sort of stay on the right side of the volatility. It helps me not be just sitting in options and letting them decay. Okay? Because when you're an options trader, your worst enemy is time. Right? When you're a buyer of options, literally from the second you buy an option to the time you take it off, to the time you sell it, you're losing money. And not because the stock is doing what it shouldn't be doing, but because of something called theta, right? Options decay. It's not like if I buy 3M and it's at, if I buy it at $130, 6 months from now, it's at $130, I haven't made or lost any money. If I buy an option and hold it for 6 months and 3M goes nowhere, I'm going to lose almost all of my money. So it's a way to get some really nice leverage, but it's also, it carries its own risk because options are always decaying. So this indicator down here is definitely for me number one. That I use it every day in all of my trades. If I don't have those red dots, I don't take a trade, period. And the second thing for me is I have really simple charts compared to some of the people I've seen online, compared to some of the mentors that I've traded with. Um, I really use basically moving averages.
Sure.
That's number two. So these three little lines, the 8, the 21, and the 55, these are very simple. These are available in every single charting platform in America. I would just about guarantee it. It's like really, really basic level stuff here. And then the third thing, and this is actually something I'm starting to incorporate this year based on two of the guys that I trade with and trust and respect, which is volume profile, which is actually this volume over here on the left. And that shows me at what price the volume is happening. So what's really, fascinating about this is basically you can see this big chunk right here.
Sure.
That tells me that along this price level, that's where the majority of these people are. So if we're above that, people are happy. If we're below that, people are not happy. And I can look at that and say, okay, well, if I'm below this, and I'm down here, chances are we're going to have these people that are going to be selling, because they're not making money. They need to get out. They're going to be having stop losses hit. They're going to be like, screw this. I'm going to go buy, Coke or something. And when we're above that, it's like, okay, well, everybody's happy here. So we can probably just keep drifting higher. Um, but anyway, yeah. So it's really not all that complicated.
Let's leave Vegas for a second because there's a
Sure.
good old argument that one could literally just invest in, I don't know, say the S&P or some broad
Mhm.
market, fund, and that's it. It's that simple. And at the end of their days, I want to say when they're in the pasture of retirement, if they've invested consistently, I don't know, 1.2, 1.5, something of the million of the alike, why not just go ETFs?
Well, that's a perfectly valid and logical argument. And if that's what you're comfortable with, absolutely. But if you're somebody that, maybe wants to take on a new challenge, if you're somebody that wants to, have exponentially higher returns than the S&P 500, you can't do that with ETFs. You just, that's not how they're designed. They're not structured that way. Like I don't know what the percentage return is, okay, but I took 37,000 and turned it into over 2 million. I couldn't have done that using ETFs. This never would have happened for me. I could have made money over the past 14 years if I had just put it in ETFs and left it alone, but I wouldn't have changed my kids' lives. I wouldn't have, gotten my 6-person family out of an 1,100 square foot home and into where we are now, right? They're great, and depending on what stage you are in your life, maybe you're comfortable where you are with ETFs and you're comfortable with that, but the really explosive moves happen in stocks, happen in names like Netflix that's gone from, a few pennies to, hundreds of dollars per share. It's incredible. You don't get those kind of moves with ETFs. But with that said, those are obviously safer. Those are obviously safer. They're more consistent. They're more reliable. And I don't want to give anybody the wrong idea. Like, hey, I want to go close out all my positions and start buying options with my entire retirement account. Right? That would be foolish. But I think that stocks are great. I think you can also get into a situation where certain stocks just resonate with certain people. Like I love trading Netflix. I like trading Apple. I like trading these Microsoft and Google. These big tech names, they just sort of resonate with me. And I tend to focus on the tech names that they just resonate with me.
Was gonna say, even with dividends, for example, like you
Mhm.
can't that overnight millionaire. I always like to say, like, get rich by Tuesday. It's not going to happen
Yeah,
with
not gonna
ETFs or
happen.
dividends.
Mm-mm.
But also very rarely. And maybe it's just because like what we're seeing on YouTube or across the internet, it's like very rarely do people literally wake up one day, make the trade, and all of a sudden, like you shared, like all of a sudden $2 million. And also, there's a lot of learning and
Hmm.
I want to say patience that goes into that, and then
Hmm.
obviously building your risk tolerance. For
No,
me,
absolutely.
as a dividend investor, I guess I started off as an ETF investor, and then it
Mhm.
moved into dividends, and then some growth plays in there as well. And where I'm at today is I always look back at where I started and say, I love that I built a strong foundation with a broad
Mhm.
market fund. And I want to ask you if that's, in your opinion, the way to go. Like, do you yourself hold an ETF as like at least a foundation so you can be safe and secure, or is it you're just all in, you're trading?
Yeah, no, I'm trading. But that's the way that I learned, right? So, I mean, I guess there's a difference in retirement accounts. Yes, absolutely. I want to be safe. I want to be secure. I want to get give me my 5% a year, whatever. That's fine. The money that I trade with is different. I don't want to say it's like my fun money because that's not the case, right? Like I built a life for my family because of trading, not because of investing in dividends, stocks or ETFs. But again, keeping in mind the audience that we're speaking to, where probably most folks are not traders. If you want to take a portion of your wealth and commit it to trying to learn something new, you could take $10,000 and 10x it trading. Taking $10,000 and 10xing it investing is going to take a long time, right? So I'm all in. I mean, you know what I mean? This is how I feed my family. This is how I put food on the table, and I love it. I absolutely love it. We can trade. Sometimes we trade slower stocks, and sometimes I'll just be like, hey, you know what, guys, this looks great, but it's doing nothing. I'm gonna move on, and I'm gonna take a 10-cent loss on these options because I'm bored. I want to go find something that's moving, but that's just my personality, right?
When it comes to the time allotment,
Mhm.
Brad, how I know you're full time. I mean, I always talk about becoming the CEO of your own life, and that's managing your finance. That's literally what you're doing on a daily basis. I'll
Mhm.
say minute by minute basis.
Yeah,
But
yeah.
if you're a beginner and
Mhm.
you're diving into trading, let's say, if it was myself, I got my dividend, portfolio, the retirement accounts. Now I'm going to throw $5,000 on the side.
Mhm.
Can I maybe do an hour a week, or is that not going to work?
Yeah, you could do 5 minutes a week. You have to work within the structure of your life. If you try to go outside of that, you're not going to find any success, and you're just going to be beating your head against the wall. So when I was learning to trade, I would set aside times. Like I knew that basically the first hour and the last hour is when most of the action happens. Most days, right? Some days you have exceptions with you know the FOMC or something at 2 p.m. But for the most part, the first hour and the last hour, so between 9:30 and 10:30 Eastern, and then 3 to 4 p.m. Eastern, that's when a lot of the real action happens. So if you were, like you said, trying to do that, maybe you take 30 minutes in the morning and you say, hey, you know what? I'm going to try and make a little trade here. I'm not going to risk much. I'm not going to go crazy. I'm not going to go do anything irresponsible. But every day this week, I'm going to try and pick a stock that I think looks good. Let's say, I'm going to take Nate's TPS method here. I'm going to find a chart that fits those parameters, and I'm going to take a trade. And then the great thing about being able to do everything on your phone is, it's, one of these situations, but you can then go about your life and you can just pull it up on your phone and say, hey, this is working. I'm going to let it work. Or if this isn't working, I need to close it out. So you don't have to be somebody like me that, you've got 6 monitors and you've got news feeds and you've got chat rooms and you've got it's 10,000. You don't need all that. You can just look at one chart. You can trade one time a day, and you can start to get into this.
I like that you said that. Get into this, because to me
Mhm.
it sounds like build yourself a process.
Mhm.
And I feel like whether someone's trading, dividend investing, ETF, whatever it is, I find a lot of people lack process and
Yeah.
consistency. I'd love to know, in your opinion, what you think the biggest mistake, or I guess the most common mistake investors across the board are making, and then more
Mhm.
specifically with traders.
That's easy. And I use this analogy all the time. There are as many different ways to make money in the markets as there are people that participate in them. But we all of us lose money in the same several ways. And number one, that's trading too often, that's trading too big, and it's not taking losses. All of my big losses, every time I've ever left my office and been really upset, it's because I didn't want to accept what was happening in front of me. I didn't want to accept that I was wrong. I didn't want to take a loss. And instead of just saying, hey, you know what? I'm down $500 on this trade, I'm out. I'd say, you know what? I'm down $500 on this trade, but hey, Mr. Market, you know who I am. Forget that. I'm doubling up. And then all of a sudden I'm down 1,000. And I'm like, screw this. I'm doubling up again. And now I'm down $4,000. And it's like, oh, just taking my $500 loss and going upstairs. You know what I mean? But so the biggest mistake that I think traders make is trying to push too hard, trying to make the market submit to their will, right? No amount of me staring at the screen and getting mad and throwing my pencil and you know what I mean? The market could give it doesn't care about you. It doesn't care about your positions. It's operating independently of you, completely independently of you. So that took me a long time to like understand. Like I would be in a position and I'd be down on it and it didn't the market wasn't doing what I thought it was going to do. And I'm trying to like scour the internet for these reasons. Like, why is Nvidia going down? Why should it should be going up? This is, and it's like, no, the market doesn't give a darn about your position, Nate. You just need to say, hey, I'm in this trade. I'm risking $100, and that's it. And whatever happens, happens. And getting that mindset built in from the very, 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 very beginning is something that I wish I could have done. I would have never lost $10,000 if I'd had that opinion, right?
I gotta say, there's this book that I'm reading now. I actually mentioned it in one of the
Mhm,
last interviews, and it's Richer, Wiser, Happier here.
mhm,
I'll hold it up to the screen for everybody. But it's funny because what you just shared, I just finished it the other day. Phenomenal read for anybody who's looking for a good book. But it talks about the necessity, and this book
mhm.
is all about interviewing hedge fund managers, the real, I don't know, masters of the market on Wall Street. Be emotionless. And over the years that I've been investing, even though it's just been, into dividend stocks, I mean, I've just become less and less emotional.
Mhm.
And it sounds like you're just empty, like in void of emotion, which is
Yeah,
necessary to trade
yeah.
exceptionally well.
It is, and it's extremely difficult. It's not something that I even in today, I've been trading for almost 20 years. I still have to work on this. It's a skill, is to just be detached from the outcomes of your trades. And that is so simple to say and so incredibly difficult to actually do. Because once we put our money on the line, as human beings, we want to be right. We want it to work, right? And it's very hard to just say, like I am putting my money in a situation where I have zero control over the outcome. I have no control. Once my money's in, like the market's going to do whatever the heck the market wants to do. I can't control it, but I'm spending hours a day, like biting my fingernails to the nub because I'm nervous about it. So getting away from that and just the biggest way, the fastest way to do that is to just trade with size that you literally don't care about, right? So like if maybe somebody's trading with $100,000 account. So what is something that they don't maybe if they lose $100, is that going to matter to them? Probably not. So if you go into this trade and say I'm going to risk $100, and then no matter what happens, I know that's all I can lose. Then you have the attitude where you're like, okay, let's see what happens. You go in and you say, well, I don't really have a plan. I'm going to start by risking 100, and then my risk is up to 1,000, and then all of a sudden I've got 20% of my account in this one trade that isn't working. That's when we're all human, right? Emotions are going to take over, and then all of a sudden you're not looking at the chart. You're not playing with any sort of strategy. You're just emotionally reacting to these computerized ticks on your screen, and that's where people really really get hurt.
If you had to grab a beer or let's say go out to dinner with one of the Wall Street respected gems, if you will, it could be a trader, it could be hedge fund manager. What would be the conversation that you would have with them and some of the questions that you would ask, and where would that conversation go?
That is it. I've never been asked that question. That is actually a really good question. I think for me, it would be all about mindset, just mindset. How do you find the energy to stay with these things especially for like the bigger positions? How do you hold something for a year, 2 years, 3 years? How do you get yourself in a position where you're saying, you know what, I have a thesis. I think Apple is going to go from 100 to 200. and I'm going to just sit through all of these ups and downs over the course of 2 to 3 years while that happens. Like that's an area that I personally would love to improve myself in because I'm all about, hey, let's find a chart. Let's go boom, 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 and we're in and we're out. And I would like to improve in that other area, but I think that's the biggest thing. I think it was Warren Buffett. I think it was Warren Buffett that said the you make money in the market by waiting, not by acting. And that's for me that's an area where I would really like to have a conversation with some of these guys about. Yeah.
Would it be Buffett? Would you sit with Buffett for that conversation, or
I mean, it's probably like the most common answer ever, but yeah, probably so.
who wouldn't want to sit with Warren Buffett? That's
Yeah,
why.
yeah. Another one be interesting is Michael Lewis. He's written all these. I don't know if you've read any of his books, but he wrote like Flash Boys and The Big Short, and he's got. I bet that would be a fascinating conversation too.
Nate, what's the most amount of money you've lost in a single day?
You know what? It was actually in 2020 during COVID, and I was working for another company at the time, and it was the day before our big trading conference, and the market was up, 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 and this COVID was just getting started. I had a ton of positions on, and the market just it opened, it gapped down, and it just puked all day long. And I said, you know what? Like I'm going to this conference. Like this is bigger than me. There's something else happening here. And I was down about $35,000 that day. But here's the thing. I just cut my losses unemotionally. I said, this is bigger than me. I can't control this. I'm going to be traveling tomorrow. I can't fight it. I'm out. I'm done. It stinks. It's really hurts, but I'm done. Had I held those positions the next day, I probably would have been $100,000 in losses. So that's a good example of just ripping off the band-aid. It's like one of the hardest lessons to learn is like, yes, it actually can get a lot worse. Sometimes we don't think it can get worse. It can get a lot worse and fast. So that's for me a true story. That's the
I'm
worst
reminded of
thing I've
that
ever.
that meme with the dog. He's like sitting there on the computer, the room's on fire, and he's like, "It's fine."
Yes. Yeah, we're good. We're good. We're good. Just a little smoke.
We'll flip the script here for you. What's been the most amount of money that you've walked away with in a day?
The most amount in a day, I think the most I ever made on a trade was actually in Activision. I think it was about a 40 something $1,000 trade. I had I'm trying to remember even when this was, but they had some sort of a catalyst, like they were going to be releasing some World of Warcraft thing. Somebody actually, one of my chat rooms told me about it. Like, hey, I didn't know about that. Let's go look at the chart, and the chart was like perfect. So now it's like, wow, we have a perfect chart and we have a catalyst. I'm loading up, and we just caught it, and it was great. And so yeah, I think it was a little over 40,000. Don't quote me on that, but it was somewhere in that range on
At least
Activision.
in that ballpark. How'd that
Yeah,
feel?
somewhere
Like,
in
what
that
was your,
ballpark.
was
Yep.
it emotionless? Were you just like, okay, 40 grand, keep it calm, keep it cool?
I would love to say that I sat there stoic and stone faced, but no, I was probably hooting and hollering. I was cheering it on. I'm human. That's real money for me. I'm not, I'm not Warren Buffett. 40,000 for him is
Sure.
like, you know,
Pennies. Is
yeah,
there anything
exactly.
right now that we're all overlooking as investors in the market?
I think the one thing just to be careful about investors and traders specifically is just be aware that we are coming up on September. It's going to be volatile. We've got an election, and maybe just between now and say the end of November, just ease up a little bit. You don't have to have full size positions. You don't have to be pushing, 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 pushing all the time. Um, it's okay to just sit back and say, hey, you know what? Like, I don't know when, I can't time it, but the markets are going to be volatile. The markets are not going to just be everybody hold hands and make money and we'll all sing kumbaya while the S&P goes up 1% every day. Expect some volatility. Just be careful, right? The money will be made after the election. The money will be made into the end of the year. I believe we're going higher, but don't feel like there is a huge rush, especially through September and October. Just it's okay to just be uh, quiet. It's okay to be calm. It's okay to be in cash. It's okay to be safe.
It's funny. It's such a different, I feel like, attitude or persona that you have from a lot of the other traders I've spoken to or seen online because it's always go, go, go. And you're here, you're like, just ease up, take it
Yes.
easy.
Yep. Yes.
Are
Yes.
there short-term strategies and long-term? Because like even as you shared, right, we're
Yep.
coming up on election month. And that's, I want to say almost in the near term here, but then you're thinking longer term. Like, how do you know when to put the foot on the pedal, when to take the foot off the pedal? Are there different strategies that you put into play?
Well, the great thing about my methodology is that I don't really care. I know this sounds so ridiculous, but I don't really care what's happening in the world. I don't really care what's happening day to day in the news. It's all noise. So what I'm looking for is literally I will go find a chart that has a pattern, a trend, and a squeeze on like a 30-minute chart, and I'll buy calls 2 weeks out, and I'll buy them today and I'll sell them tomorrow. Or even better, I'll find something that's happening intraday and I'll go find that pattern and I'll buy calls at 10 in the morning and I'll sell them at 2 in the afternoon and I have no risk overnight. But for me, long term is like 2 weeks. If I'm in a trade for like 2 weeks, that's for me, that's a pretty long time. So I know that that's totally different from the investor's mindset where it's like, I'm just going to buy, I'm never going to sell it. I'm going to give this to my children one day. But right now, I think it's very hard as a trader to right here at the end of August, beginning of September, be thinking about long term. I just feel like to use another Vegas analogy, right? I want to see another card.
Sure.
We're playing poker. I want to see another card. I don't want to make any big bets until I see another card. And that other card is let's get through September. We've got rate cuts coming up. What's that going to do to the market? I think a lot of people think that's going to be the trigger that sends the market to new highs. I don't believe that's the case. I think it could be a sell the news type event. We've got an election coming up. What's that going to do to the market? I don't know. So for me right now, it's like, okay, I'm either having positions that are expiring in 2025. I'm out past all this crap, or I'm trading 30-minute charts and I'm in and out in 1 to 2 days. I'm that middle area, that 2 to 3 weeks, 1 month to 2 month position trading for me right now is just really for the most part off the table.
And if it's intraday trading, it's the same. Everything's the same trend, right? It's
It
whether it's
is.
just in the day or the week or the
Mhm.
month,
That's
all
exactly
the
right.
same.
Absolutely. Yep. All the same. And we can find chart setups on a 5 or a 10-minute chart and we can day trade it. Or we can find a chart setup on a weekly chart and we can go buy calls that expire in December 2025.
Is there a better starting point for someone? Like, would you recommend, I don't know, day trading or maybe
I
5 minute trading
No,
versus
I
2 weeks
actually
at
would
first?
recommend for somebody that's just getting into trading. I think the cleanest way to do it is to look at daily charts because then you're not worried about like the 5-minute chart. It's the smaller chart you look at, the more controlled and dominated it is by computers, by algorithms, right? Like algorithms own small time frame charts, but they don't determine what Apple is going to do over the next month, right?
Sure.
They don't determine that GE needs to go from 100 to $200. But on a 1 minute chart, they can sure as heck move the price around from 100 to 101, back to 99, back to 101, and it can make your head spin. So if you're just getting started, I would recommend daily charts and I would recommend doing options that are like 60 to 90 days out in time.
Sure. Yeah, you
Mhm.
shared you're a little bit pessimistic or more rather to sell the news once the interest rates are finally cut, whenever
Mhm.
that day comes, hopefully soon.
Yeah,
I mean, for 2 years now, we're like sitting here
yeah,
waiting for it.
exactly right.
What leads you to that thought process that it's going to be the sell the news?
You know what? It's funny because it's it maybe just this little bit of the pessimist in me, but I feel like everybody I talk to that does not trade, right? Like everybody in my family knows what I do and friends know what I do. And they say, hey, man, it's going to be great when they cut interest rates, right? Then that's when I'm gonna really go big. And I'm like, oh man, if everybody feels that way, like is that what's going to happen? No, because people know that interest rates are not coming, and it's already been priced in. So look at what the market's done over the last 6 months. It's already priced in. And I actually think the markets are higher into the end of the year. I'm just looking for a sort of a sell the news, you know, oh man, September, October, volatility into the elections. And then once that's all done, higher into the end of the year. I could be dead wrong about that. And I'm not going to make a big bet either way, but I can tell you one thing. When we have the FOMC in September, I am going to be an interested observer rather than an unwilling participant, if that makes sense. I'm
Sure,
going to
sure.
be sitting back with my popcorn and I'm going to be ready for anything. And I'm sure I'll trade it, but I'm not going to have big positions. I'm not going to be overly committed to the market going one way or the other. I believe we're in for some more volatility.
It's been such, I hate to use the word unprecedented because I feel
Mhm.
like, in the news, we've heard that so many times throughout the past couple of years, but it really has just been an unprecedented few years in terms of every geopolitics, everything that's going on. And it just, I mean, to think about what could happen in the future, and I was thrown off thinking, okay, there's no way that we can continue at the pace we were. Here
right?
we are at fresh new market highs. As a trader, I'm curious to know what your year has been like. What's been one of your best trades just this year alone with everything that's been going on?
You know what? We've actually been focusing a lot on what we call high short interest names, right? So names that have a big bet against them, big short interest positions, and we're looking for instances where the shorts are wrong. Okay, and they get short squeezed because the market has been relentless. I mean, yeah, we can buy Nvidia, we could talk about Nvidia all day long, but I really have been fascinated with this short squeeze idea. Um, and these are not great companies either, by the way. These are companies that usually have some problems. But if you look at a name like CVNA, Carvana, this is a fascinating stock. It was at, I think, almost $400 a share during COVID. It dropped to like $6 or $7. And now it's trading back at 150. I mean, $6 to 150. What an incredible move. And we're talking about this has happened over the last year. Not a decade ago, it was at $6. Like that's amazing. So when we look at names like this, and then you use options to sort of supercharge your trades, we this is just an example. We've traded Carvana a lot this year, and this is really a fun place to participate in the markets. It's very volatile, it's fast paced, which is great for me, and as the market continues to push higher, you have a situation where if you're betting against it consistently, you're usually going to be wrong. And once you're wrong long enough, you start to experience that pain, and then you have these incredible moves like the one I just mentioned. So yeah, that's been a focus for us this year.
Now, moving forward into this year, I mean, I know I'm excited because as I just continue to have more masters of the market on here,
Mhm.
and someone like yourself, now a teacher of the game of trading, I mean, this is, I feel, an opportune time. Just
Yeah.
no matter what's coming in our future. So you have this thing called a open house, which I'm pretty
Yes.
stoked about. I'm going to be joining. So for
Cool.
everyone out there, yours truly, a dividend investor here, is going to be jumping in this live open house. What is it? What can we expect? What's going on
Yeah.
in this open house?
Sure. So the open house is I run a service called Daily Profits Lives right here on my hat, and it's essentially a trading room. It's a group of we've got a couple thousand people in there. We trade together on a daily basis, and just like I was showing you my screen earlier, I do the same thing in the open house. So we go over charts and we'll look at options, and I'll trade my real money cash account live in front of everybody in the open house. So it's a way to it's a way to really give back, honestly, because when I was learning to trade and I got an opportunity to watch my mentors trade live, for me, it was clear my schedule. Don't call me. I'm busy. Don't bother me. I'm learning. I want to learn how to do this. And I can't do it any faster way. This is the best way I know how to do it is to watch somebody that does it do it live. So that's what the open house is. It's a way to give back. It's a way to say, hey, you know what? If you're interested in this, join us. It's 100% free. There are no obligations. We don't need your credit card information. We need any of that crap. Just join us. And maybe, the goal is, of course, we're going to make some money trading. But I don't know what the market is going to be doing that week. But at the very least, right? You can come and you can learn and you can say, hey, this is something that I want more information about. Okay, well, this is a free resource. So it's going to be me just like this. I'll be on the camera, I'll be on the mic, and I'll be walking through charts. I'll be teaching, I'll be coaching, and I will be trading live for a whole week. It's a
Can,
lot of fun. It's a lot of fun.
can we jump in? Like, is there Q&A? Is there live chat,
Absolutely.
or is it we're
Absolutely. It's a
just watching?
live chat room. So you'll have the room is kind of broken down like you got my screen right in the middle, and then off to the side is the live chat, so you can chat with me or you can chat with any of the members. You can ask questions. There's a little tab so you can talk directly with the moderators if you have like a technical question. Hey, I'm interested in this or that or the other thing. You can reach out directly to them in a private chat. But yeah, so you could say, hey, Nate, last week we were talking about GE, and I see this week it's up, $8 a share since we talked about it. That's pretty sweet. Like, how did you know that that was going to happen, or why did you think that was going to happen? And we can look at that. Or I spend probably 3/4 of my day literally just looking at charts for other people. So somebody say, "Hey Nate, what do you think of Nvidia here into earnings? What do you think of AMD here? Man, Amazon can't seem to find a bottom. Like, where do you think this thing is going to stall and turn higher again?" And we'll just pull up Amazon, and I'll start going through my entire process. It's like, okay, Let's take a look back. Let's look at the weekly chart. Let's start there. Let's zoom into the daily chart. All right, now what's happening on the smaller time frames? And we'll break these charts down. And a lot of it is repetition, is repetition, is repetition. Is this chart tradable? Yes or no? Well, let's break it down. Does it have a trend? No, well, we can't trade it, right? So it's very interactive, just like you and I are having a conversation. This is sort of what I do with the room for a whole week.
It's an easy way, I feel like, for someone like myself just to jump in, see what's going on. Is it for me? Is it not for me?
Yeah,
I'm
yeah, absolutely.
curious to know what are some of the stocks right now that excite you the most, that maybe even heading into next week we might even hear a lot of just because they are exciting you the most and we'll be following suit.
Yeah, I mean, obviously, Nvidia is up there. I want to see what happens with their earnings, but that's one that I'm going to be following along closely. If they have a big beat, everything's going higher. If they come out and something screwy happens, we're going to have a lot of volatility to the downside. I'm following along with the big names: Netflix, Apple, Microsoft, Carvana, which I mentioned was the high short float name, and there are some other little names that I'm following along right now, like FWRD, which is Forward Air Corporation, which you may or may not have heard of, but it's a name that has 25% short float and a really interesting chart. So we're kind of spreading our bets around and looking at some of these sort of unique situations. And then, of course, we're following along with all the Mag 7 and the indexes. We trade the S&P 500, we trade the NASDAQ. So, in our room, we're really focused primarily on big companies.
Nate, one of the reasons I wanted to bring you on again is because though you're not a dividend investor, value investor, you are a master of the market in your own right, going from losing the 10K to now over 2 million. And I feel like you've really provided, at least for me, just a gentle, warm approach to
Yeah.
a new outlook on how to trade and invest and make money. I do want to ask you before we get
Mhm.
to our last question, because there's so much fluff out there,
Mhm.
definitely across I mean, with traders, get rich quick. How do we know who to trust when there's so many people out there? And this, I mean, this question can go in any way for an answer, but I'm curious to know, as a trader yourself, like how do we know which traders to trade with?
Right. Yeah. And that's a great question. I don't necessarily know that there is a simple answer to that, but just when I was learning to trade, I I opened the door to allow myself to experience what the trading community had to offer. And certain personality types resonated with me and certain didn't. I don't really care to have somebody on screen who's like, "Woo, let's go get this," dropping the F bomb and like that didn't resonate with me. Like just a normal dude, right? I've got kids, I've got responsibilities. Like I want somebody to be calm, someone who's going to be, based in logic, not saying, "Oh, I really hope this happens, and I'm going to turn this $10 into 500,000 between now and Friday," right? Like that's no, no, no. Let's just calm down. I want to be with somebody that has a method to the madness, so to speak, right? So but different people are gonna maybe younger people probably even are gonna go find that guy who's hooting and hollering, and they're like, man, I want to follow that guy because I just saw it. But over the course of the next couple of years, that guy probably is going to be living back in his mom's basement. You know what I mean?
Sure.
And the people that are here calmly just sort of like look around. Let's talk about the indexes. What is if you have somebody that's not talking about what the S&P 500 is doing on a daily basis, it's probably not somebody that I personally want to follow, right? I want to know like where's the big money going? What is the big money doing? Yeah.
The last question for you, Nate, and I'm excited to ask you this one because you lost $10,000 to start. And
Yeah.
so the last question I always ask every master of the market is, if I were to give you $10,000, how would you play it? And for you, I think this is a great question. I'll give you the 10K right now. What would be your go-to move?
Wow. Go to move. I'm probably just slow and steady. Just slow and steady. I'm trading only the best names. I'm only trading the best setups. And until we get that amount to a little bit bigger level where we can take a few more risks, it's conservative, 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 conservative. Right? If it takes me 6 months to double that account, fine. I don't want to lose it in a week. But that for me would be it. It's just let's say we're gonna start, we're gonna go slow, we're gonna have a method, we're gonna have an approach, and we're going to freely admit when what we're doing isn't working so that we can keep what we've got and build it.
We're not losing that 10K again.
No
Bottom
ego,
line.
no ego at all. Just no pride. Let's just slow and steady.
Investors, Nate Bear on with us on Masters of the Market. The pinned comment will have a link to that open house where you can join Nate firsthand, join that open chat of his, learn how to trade. I mean, again, from $10,000 lost to now over 2 million. That is a true master of the market. So, Nate, thank you so much for
Yeah,
joining
thank
us
you.
here on this chat. And we look forward to jumping in with you next week in that open house. But
Yeah.
until next time on Masters of the Market, investors, we will see you all there.